gold prices started out the week opening higher, getting up to $34.50, their highest since making all-time highs back on April 22nd. However, it was a short-lived rally as we saw gold prices reverse lower and actually closed down by almost $50, down the way down to $33.85. So after moving higher initially, reversed and moved lower down to $33.85. Now, a lot going on. These geopolitical tensions that were elevated going into the weekend seem to be finding a little bit of easing source and moving lower. Likewise, we saw the dollar sort of move lower and then rally as rate cut odds are kind of shifting back and forth. Again, the Fed looking to cut rates 1 to 2 times this year. At least that's what the market's telling us, but we'll get some clarity from that on Wednesday at the FOMC meeting, and not necessarily at the policy shift, but at the post-FOMC press conference from the Fed chair, where he will likely talk about continuing to remain patient. But ultimately, gold prices, which have been rallying for quite some time, saw a bit of a pullback today, down about $50, down to $33.85 an ounce. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll see volatility is moving in tandem with prices. So initially, volatility nudged higher as prices went higher, and then as we saw a pullback off those near all-time highs, we saw volatility coming off as well. Lastly, let's talk about positioning. What are speculators doing? Well, as of last week, speculators really didn't see much change in their positioning. So sort of a wait-and-see type of attitude as the market looks ahead, not only to elevated global tensions, geopolitical tensions, but also this week's Federal Reserve meeting and post-FOMC press conference.